Between the start of 2008 and the middle of last year, the price of bullion shot up from around $800 an ounce to almost $1,900 as investors piled into what they saw as a trusted asset. Since then, though, the price has dropped by close to 20%, despite the deepening debt crisis and recession gripping much of Europe. Well, joining me is Richard Whittall, Chief Executive of gold prospecting company New Strike Capital. Nice to see you. Thank you for coming in, sir. Now, we've got this rather interesting chart there. You can see it's a 4-year chart, and gold has gone from just over $800 up to $1,500. Now, a skeptical man would say what goes up has to come down. It's had a great run, but we're over the top. The trend is going to be further down.
Well, you might want to believe that, but in fact, I don't see any diminution of global risk around the world, so I don't see a falling out of bed of gold.
When countries start printing money, as they are here in Europe, certainly in Britain and in America, that normally, somewhere down the line, prompts inflation.
Absolutely.
And inflation is normally good for gold.
True. However, I think what you're seeing in the market is that you're seeing a lot of central bank buying and selling, but you've seen a remarkably stable gold price. It has traded around the $1,600 mark for quite some time now. So I'm not sure that it is a store of value. It is an asset class. It has fallen out of bed, and people fall back in love. The risk on, risk off trade, but I do see a floor to gold.
What about the demand for gold beyond investment? So the demand for jewellery, now traditionally that's been driven by India. I read that they have cooled a little bit.
Well, they proposed a tax last fall, and of course there were riots over it. They rescinded it, and the jewelry market's not the season for it, but typically it happens in the fall. But what we're seeing now is a huge influx of demand for jewelry, places like Hong Kong, where there's significant year-over-year increases.
So we're talking about new wealth in the Far East. China too, perhaps?
Absolutely. I think that will come in time. I think you probably saw in November a record central bank buying, but as disposable income in these developing countries increases, the demand for luxury goods. There's no question. I think there's significant demand for gold.
Now, you said that gold has been relatively stable recently. True, and yet your share price has been incredibly volatile. I see 8 months ago it was $2.50. Today it's $1.4. Why are you not in tune with gold?
Well, we catch when senior gold companies have come out, in the last few years they bought a number of companies and they've had projects on the fly. Those projects have undergone a significant cost increases and making the projects' internal rate of returns go down. So those companies have become worth less. And the seniors, the big producers, the Goldcorps of the world, the Barricks of the world, when they go down, we catch pneumonia in the junior market. And we are seeing that.
Now, your company mines primarily, as I understand it, in Mexico,
yes,
where the production is but a fraction of the big players, such as Australia and China. Why Mexico?
Well, you're going to see a big change in Mexico. It's most noted for its silver production. However, the largest gold mine in Mexico was found in a state called Guerrero, just about 4 hours outside of Mexico City. And that gold belt is one of the largest gold belts in the world. It's coming on, I think there's an inventory of over 15 million ounces 4 hours from Mexico City. So you're going to see increased production coming out of Mexico in gold.
Now, I'm asked this question all the time by small investors who say, well, it's all very well for you, Randall, to write about the attractions of gold, but here I am sitting in shipping Salisbury. How do I buy gold? Because it's very difficult. I can't just turn up at a bank and say, give me a big chunk of bullion.
Well, you can, in fact, but there are certainly ETFs that are gold bullion ETFs.
And what are ETFs?
Exchange-traded funds, and they listed here in London and also in New York.
So you can buy through a fund, but you're still not buying the physical gold, are you?
It is backed by physical gold, absolutely, the GLDs.
All right. And one of the old cliches, but I think a true one about gold is that an ounce of gold at the time of the American Civil War would buy you a decent man's suit, a decent gentleman's suit. It was true in 1900, it was true in 1950. Today, it's still true. Will it be true in 10 years' time?
I think the only reason you see gold go down in the future is largely because there is a staged economic recovery. It takes the shine off gold.
Okay.
I think it's just common sense.
All right, Richard Whittall, nice to see you. Thanks for coming in.